Good afternoon, traders and investors around the world. Welcome to this Wednesday, June 21st edition of Pre-Market Prep Plus. Joel Alconin joining you here on this Wednesday and a rocky day in the markets. Bill did a nice little trade, red to green Nike 110 call. We'll take a look at that. Going against the markets, S&P stock index futures are trading down 18 and a quarter handles at 44.16. Now, it hasn't been quite the easy trip for the bears here. Can tell you that from personal opinion. You took out the pre-market low or yesterday's low at 1050. We talked about that. Staged a real nice recovery, kind of ebbed and flowed back with Mr. Powell's comments in front of Congress. Got back, almost got back green on the session here, headed into the final hour, but took a turn for the worst here in the hour of power here. Now ascending towards the lows of the session. The buck, that was green, and now it's red, coming up on a critical area here. Your low from last week in the buck, 101.58 and a half. You've been to 101.62. Keep an eye on that for more downside. Actually, that's a triple bottom as we bottomed at that area back in May, on May 16th. So big turning point for the dollar. Bonds turn north here, and we got a 5-star in the daily bond market here, trading at 128 and 10/30 seconds. It was a high. We've hit 9, 10, 11, and 1. Major resistance here in the bond market, kind of looking like that 134 level a while ago. Crude helping oil stocks up a buck 37, 72.56. Gold off the lows, but still down 2 sticks at 1945.70. Silver is the killer here, down to over 2%, 50 cents at 22.73 and a half. And Bitcoin bulls are ruling the day up nearly $2,000 here, over 30,000, about $1,000 off the high. So had a nice little rush there in Bitcoin. So there's a breakdown of some of your commodities and futures here as the S&Ps are now head within 10 points of the low of the session. Let's see what Bill Big D is up to here. Bill Big D messing around with Nike. And not a big range here in Nike. Maybe Bill was focusing on yesterday's low at 108.96. Caught a bid there at 108.71 and then got back. He went close to the in the money call, 110, and rang the register as it got back over 110.36 because we know how those premiums can evaporate on you in a hurry. Also, I mean, I told Triple D I just didn't like the way that AMD was shaping up here. You had multiple lows. Now you're getting into the gap area that you had no business being along this thing after it breached 120.89 today. Actually, it breached that level yesterday. It couldn't retake that level in today's session. Now looks like we are going to have a gap fill eminently at 108.91. I don't know about buying a dip. I know he was talking about reloading here at 110. I don't know. Big decline. If you talk about AMD, you got to talk about NVIDIA. And, once again, this gets hits. Wow, but it's 12 bucks off the low of the day, man. This thing is just a volatile puppy. 420.80 at the low, back at 432.37. So looks like it's going to be a red candle, folks. But man, oh man, 12 bucks off the previous day's low. I had earmarked the 427 level. That was a double bottom. Looking for more downside, but man, oh man, oh man, if you don't watch your daily lows or cover short or do something in this one, this can ram it in your face pretty quickly. Let's add the pre-market trading action here. And boom, the 24-hour market is what we like to see right here, and following the markets for you guys around the clock. 24 hours for the futures and for the stocks at 4 a.m. We're up there getting stocks for you to watch. But the call of the day, the call of the week, the call of the month, and you had all day to fade it. Tesla. makes a new high for the move, and then reverses Barclays downgrades. Hats off to that Barclays analyst making the call on that one. Damage is done so far, down about $13.50 at 261. I'd be keeping an eye on this 257.5 area, folks. If you are long Tesla Inc., you got to be aware of this level. You had a low in today's session at 257.78, right? You're low on Friday, 257.21. That's breached. You got to bounce here, but underneath that 257, I think the next daily low comes in at 247.29. A couple other lows at the 250 area, but that's what we are looking at in a Tesla Inc. Another analyst call that wasn't so good, and I hope you guys and girls paid attention to this one. The Spotify upgrade. I gave this as a 5-star this morning. The reason it was a 5-star is because you hit 160.63 on June 16th. Friday, that had been the high of the move. And the reason we added significance to that level is it was a double monthly top, that entire 160 area going back to April and May of last year. So price has memory and it is sticky here. So that is a look at Spotify. We'll have Mr. Todd Gordon joining us here in just a few minutes. If there's any issues that you have, well, I can't help you with all your issues, but any issues, the thinker. George Carlin pops into the chat and he is looking at the Google. I'm a Goog guy, so I'm going to just do the Googster and then you can make it accordingly. Do not like the price action over the last couple days. Trap door for me here, and it's pretty darn close to it. 120.75. That was your May 24th low. 120.86 is your low in today's session. Minor stopping point, only a 1-star at 119.46, but I'd be looking on the downside more for under 117. Under 117, you'll find 3 lows. That's good enough for me. Back in the middle of May, those lows encompassing 116.55 to 116.63. Another leg down here yet in the S&P 500 index futures. We are quickly approaching the lows of the session. The thinker, what else? I can't, not much else to tell you on this one. Resistance, well, they couldn't get to that closing price of 123.85 from yesterday. This is a 3-day losing streak for the issue after posting a high close of the move. Can you guys news me here? Am I missing some news here in the market? Let me check my news sources because it's not really a news move. You guys know what a news move looks like. It just looks like people are like, get me out that quad wedge top, which is something that we've been talking about consistently here since that quad wedge expiration on Friday. A million to buy on the sell side. Well, someone said sold to you. Boom. Fed Bostic says rates should stay where they are for the rest of the year. Fed should do all it can to avoid a significant. Okay, that was at 3:37. But this was heading into the 3 o'clock hour. What I'd like to do is look at the chart and see when we started the decline. We'll go to the SPY so it doesn't mess up my charts. And the decline really started ahead of that. So I don't know. Can't blame this one on Bostic here. Just kind of looks like continuation of the recent sell-off. This will be if things stay the same here with 19 minutes to go. It looks like we're going to have a 3-day skid here, a 3-day losing streak after a 6-day winning streak. Matt, hey, Matt Murator, Campbell's Soup. Will it break below its 52 weeks? Well, let me look at my crystal ball. Let me pull it out here. And Campbell's Soup, 52-week. What is going on with Campbell's Soup? I think that was earnings, and they weren't very good here. Man, a stock is making a new low of the move. A couple days after earnings, it hit 45.42. There was another low at 45.61. A bunch of lows in this area. Got a little of a bounce, coming back down. A little bit of a lighter volume day, so just some weak sellers here. But what would be the 52-week low? Going back to June, that's 44.37. I mean, if this area is breached, I mean, support is support until it's taken out. But right now, you got a key level here that needs to hold. You're trading only 23 cents above it of the low. I would say, if I have to bet a wooden nickel, I would say, yeah. I mean, this thing really doesn't show any signs of a turnaround. It's one of these gap down day situations where on the earnings, the gap, even though it was a much lower open, you got a little bit of a pop on the daily, nowhere near the bottom of the previous day's range. And then they're just saying, they're out. I have not looked at other food stocks. Boom. But what I'd have to say too, Matt, is something on this one. I don't know if you listen to the morning show, but risk, this has been for the last week and a half, last couple of weeks, this has been a risk on market. Getting out of these kind of stocks. Like, who the heck needs Campbell's soup when you could be long Bitcoin or Unity or Roadblocks or all these other stocks? So, the rotation is out of some of this, safety value trades, and Campbell's soup. Let's look at see if I can think of another food stock. How about the Great American Chocolate Bar? That is peeled back from its all-time high. Hershey's. But man, that has just had a big run. That stock is still looking okay from a longer term trend. So yeah, just attribute it to rotation. We all know about rotation in the markets. And we'll get one more stock in here. Eric M. Good old Eric. How you doing, Eric? Glad you could join us here on the closing print. What do we talk about? We talk about consolidation, right? After a big move. You're talking about a week and a half of consolidation here. You did breach the previous day's low. To me, I give you the green light here down to at least $30. Just pressure on it, but respect support 3080, 3084, 3087. Support is support until it's breached. But man, it's teetering. It's actually bouncing pretty good. So it's going to be off the low of the session. So I'll stick with that 3084 as a 4-star, and that's your trap door. Coming back on the upside here, you want to break that string of two lower highs, two lower lows, two lower closes. So have to see if this can step up. So I'm gonna stop the screen share, and we're gonna see if we can rustle up Mr. Todd Gordon. He is the founder of TradingAnalysis.com and New Age Wealth, and he also happens to be my favorite Elliott Wave technician.
Well, that can't be a very long list.
Proctor? Bob Proctor?
Yeah. Well, let's not even go there. He's a friend. He's from upstate New York. He's from about 30 minutes away from here, if you know that.
Okay. So let's get the important matters out of the way first.
Yeah.
How did the baseball game go?
Oh, man. We won. It was a battle. Thanks for remembering. Yeah. We were down by 3 last inning. We were down to 2 outs, 2 strikes, 3 times. And the kids fought back and put 4 on the board for a walk-off in the bottom of the last inning, which was the 6th. So it was awesome. I'm just playing.
Man.
We're gonna have a pool party. I got a bar and everything in the backyard. So I was just planning the pool party for Saturday for the kids.
Okay, well, they're not 21, so you better, easy on that would be adult beverages here. So wanted to check in with you. going in, a week ago today. I like to give credit was due, and you were bullish heading into the quad witch expiration. We talk about turning points. So a week ago today would be the 14th. Well, we did get a pop up
Yep.
close to 4,500. But we're kind of back at that area. I'll just give you that closing price last Wednesday, and that was 44,1850. So we're a tad below it, a
Mm-hmm.
three-day losing streak. Does that? I mean, are you one of these people like I'm glad when the market goes down because I can buy more?
Yeah.
Or yeah,
Yep. Yep. Yeah. Yes. Yeah, absolutely. It's been a, yeah, every time I come on, I know you are so focused on the S&P. Normally I am too, but like for me, the NASDAQ is just leading me
okay,
around. You know what I'm saying? Like
that's
I,
fine.
the S&P is just, what's the difference between cash and futures right now? What's the premium? Whatever. It's not, it can't be that much, is it?
No, it's quite a bit because of interest
Okay.
rates. The cash is 43.70 and the futures are 44.15. So you're talking
Wow.
about, yeah.
Five handles. Okay. All right. Yeah. So can I just show you with charts? Do you mind?
Steal the charts, man, and you know what? If I talk S&P and you wanna talk triple Qs, then by all means, I think I bore these people with all my S&P talk. But
No, I
let
normally, listen, man. I live and die by the S&P. I mean, I look at the S&P 500 chart and I think back at like what was going on in my life at that point in time. You know, it's like your family photo album. So I'm with you. But it's just
just
more
a
of a,
quick note on that. Do you know they
yeah.
started trading Globex? Do you know the date?
I don't know the date, but I would. Yeah, no, go ahead. What is it?
June 25th, 1992.
92. Okay, so we're coming up on what is that? 23 plus 31 years here, pretty soon.
And you know how I know that?
Wow.
That was the day my first daughter was born.
Oh, that's awesome.
I actually, I should break out on the day of the markets. Are we going to be here on the 25th or is that, no, that's going to be a Sunday. I'll break out a button that I have. I still have my broiler chicken pen when they broke out broiler chicken futures that didn't last very long. But I'll break that out. But anyways, I easily get distracted. Let's look at the S&P
Oh, you're
and
echoing my
then
point. Like you look back at the S&P 500 chart, and you're like, this is what I was doing in my life. It's like it should be the photo album. But no, I'm with you. That's really awesome. 92 Globex. Holy cow. No, I think, it's just more that for me, the NASDAQ is just showing better, it's showing better leadership, obviously to the upside, but it's just respecting technical levels even more so. So it's like, I'm kind of basing where we are, where buyers in control, sellers in control in the NASDAQ. Like S&P is kind of caught, I love that it broke above the August high. So it moved above there, but there's a massive cluster, really significant levels, and I can go into details as much as anybody wants here, between cash 44.67 and 45.09. This is the daily S&P cash chart. Huge decision points up here. I would be shocked, Joel, if we leave this untested, like within the next few weeks. So we're above support, but we're below resistance in the S&P. The NASDAQ is against really awesome key technical resistance that was the equivalent of that SPX cash level I just gave you. We went up. I mean, it's the 786 retracement, which that's the what we call the retracement of last resort. Everyone knows the 618 retracement, whether up or down. I feel like the 618 tends to be a stop run target, and by the time whoever or whatever's running stops through 618, by the time they exhaust themselves, it's usually into the 786, and you find some pretty good reversals there. So 786 NDX from the November 2021 high, the trend, the downtrend, the correction actually ended here December 22nd. This is getting to some pretty esoteric and involved Elliott wave, which I live and breathe, that I can't get rid of it. Anyway, so that's a really key level. Plus you have this old March of 2022 high. So we went up and just failed there in the NASDAQ. And I'm fine with it. Like, I love the move that we just made. It's parabolic. It's very wave 3-ish. I think we're moving back into wave 4. And what's interesting is if you look at, I really get into it. You look at the duration of wave 3, you look at the percent change in wave 3, calculate your fib, you get all your support levels based on a retracement wave 3, you do a projection from wave 2, et cetera, et cetera. And I'm going to arrive at the point here real quick. You look at it in both price and time. Well, the price zone begins down here in the NDX at about 14,005. And then you have deeper support down here just south of 14,000. The time starts to come in around July 14th. And then we've got a couple more pairings in the next 2 to 3 weeks at the end of July. So what do we have? We've got earnings that start on the 12th. I think we have CPI that comes on the 13th. Then we have FOMC, I think the 26th. So I almost wonder if the market's on hold, and if it's a wave 4, which, using Elliott wave, if wave 2 was kind of sharpened to the point which this was, usually wave 4 will be sloppy and choppy, sort of sideways. And I'm wondering if we kind of chop in a wave 4 into, the last 2 weeks of July. So I'm long, I'm strong. I have my shopping list together, but I did put a pretty good size NDX hedge on, a butterfly in the downside. If we can come on down and kind of cozy into these levels, it's basically a risk in 1 to make 9 if we do get the pullback here.
Love that. Love that.
And I can show you the trade if you want. I know you like to get into the crazy option stuff.
Yeah. Yeah. Let's see that puppy.
All right. So this is just a cash account that I trade. It's a non-qual taxable account. So I hate taking profits on stuff. This is the stock swing desk we hold for our clients. So here's what I did. I went out into the July 6 options and I put a butterfly on, and I'll show you what it looks like on the risk graph, but this is the lot position. So you're trying to get down to that 14,400 level. So that's the body, the butterfly, that becomes the objective. So back on the chart, 14.4 is going to be right down into that first blue zone of support. And it matches up with the time as well. So if we go over to analyze, here's the actual trade. So right now, NDX is trading, should be right here, just about 14.9. That's the current price. My total risk on this is about $3,560. If everything goes completely wrong, that's all I lose. Break even will be if the NASDAQ is below 14,580 on expiration, which is July 6th. And then if we do get down to that 14.4, that gives you 32, 33, 35 grand potential profit.
Nice.
So if we get down there, it's like a delta 16, negative 16 put, which the market is only giving it a 16% chance of getting down to that level. And if you look at, again, the kind of the key technical, that I pulled out, and just, is this a big deal of a pullback? You're asking nothing. But the market's only giving it a 16% chance between now and July 6th. That's why it can, risk 1 to make 9. So I'm like, rather than pay taxes and get out of these positions that I'm in, let's just hedge it off. So That's what we just did.
Wow. I never do anything less than a delta negative 15.
It's way up.
I know. No, you know what? Actually, I'd say some of the option trades I did have probably been negative delta, like triple digits. But okay, I like the setup there. I like the hedge. I'm looking, and I sometimes I like to keep my analysis a little bit different than yours. I just like to see, when I look at something, like what's jumping out at me. And I look at the triple Qs. There's there's one thing on the monthly that really sticking out to me. And you picked it up with your Elliott wave analysis, that March 22 high, 71.83, right?
Yeah,
you got through it by $1. I mean, what's $1? Right? What's $1 in the triple Qs? Well, it's a percentage. So I'm looking at that. So, and that's on the upside. Now on the downside here, I mean, you might be whistling Dixie here. If we could breach this 360 area, and now I'm going to the upper right chart, and I'm going to the upper right chart,
Yeah.
and
Yep.
this really wasn't even resistance for very long. It was one day, during that quad witch run,
Quad
but
switching.
you
Yeah.
had two lows in the same area, 60.03 and 60.42. Today you got to 60.96. When I see these kind of setups on the daily, obviously the monthly, talking to monthly is not going to do people any good now. But a breach of this 360 here, and you got some room here. I mean,
It,
yep, that's what
I
I'd be
laid
looking
it
at.
out. I laid out the equivalent deltas on the Qs for clients that didn't want to do the NDX because it's a bigger price. So it's a 355, 350. 350 is the center strike, the objective 346. So
Mm-hmm.
it's 350 by July 6th. I'm like, I don't know. I mean, I don't know what's in the next 2 weeks that would keep this market ripping up through such key levels. I mean, everything's trying to pull back a little bit, and at least Apple stopped going up. So it's like, I don't know why this trade wouldn't work. I mean, I'm not saying, but I feel pretty weird going into this that it's probably going to work. I don't know why the market would. Seems like every time there's an absence of data, like it happened the last couple of weeks, when there's an absence of data and the market's got nothing to focus on, they tend to take profits on growth and rotate into value. And I feel like that's what's going to happen here as we get ready for the back half of July, which will be super key.
Yeah, no, and I just one thing I just got to say, on the other weight analysis, and probably it's something that I probably don't incorporate into my analysis as much, is the time frame. Your time expectations,
Right. Right.
and there's price and there's volume, but there's also time. And
Yeah.
if you're adapted trading the option markets, I mean, you got to have these time projections, or else the premium gods are just going to get you. But with something like the butterfly, you're buying and you're selling, right?
Yeah.
So
Yeah.
you get advantage of some of the decay, and then unless if the volatility ramps up, it's going to be to the downside, and that would work favorable to your position. And I would just say, I'm just looking at like Microsoft here. I mean,
Mm-hmm.
it's been a nasty expiration, quad witch. That's another thing that, we talked about is, running into a quad witch expiration. You actually made the high of the move in the pre-market session, and then you missed it by a tick in the opening of the regular session. So I still know. Yeah. Yeah. Don't
That's
be a
crazy.
blank for uh,
Don't be, yeah,
a
yeah,
blank for a tick.
I know it.
Yep. But no, Todd, great
Hey,
analysis. Go ahead. You got a question for me? We're coming into the closing print here.
oh, you got to here. Let's mark that closing print because I usually talk right through it and I make you miss it.
How many seconds do we have here? Well, they always adjust it. Now they're doing it on the 1 minute VWAP. Oh boy, we got sellers coming in here, heading towards the low of the session. I'm looking at 44.08, and this was supposed to be with some buy imbalances. 44.09. I think maybe 44.09 print here. I wish I had seconds on this clock. 44.09 and a half. It should be, boy, it's the longest minute of my life here. But definitely sellers into the close. This is a 3-day losing streak here, followed up by we had a 6-day losing streak or 6-day winning streak heading into quad witch. Now we're on a 3-day 44.10 is what I'm going to call it. But go ahead, Todd, make your last point here, and then we'll wrap it up on this Wednesday.
Yeah. One of the things that I keep harping on is so many people, looks like my NVIDIA is, I'm bullish NVIDIA. My graphics card is blowing up here. I was going to show you this. A lot of people are saying this, just be careful of growth trade because it's being led by just a few stocks. I have the stats. What would you guess, Joel? How many stocks in the S&P 500 are outperforming the S&P 500's return for the year to date? What would you guess?
20%.
You're very, very close. It's 136 stocks as of like midday today of the 500 were outperforming the S&P. Of the NASDAQ 100, You're close. What would you think? How many stocks are outperforming?
25.
25. You nailed it. It's
Oh, wow.
one in four, 25 stocks out of the NASDAQ 100 are outperforming. So when you say it's just a few stocks doing the heavy lifting, you're like, well, 25% of the stocks are doing better than the benchmark. And the other thing is like, I was doing some long-term analysis. People are saying, be careful, the growth trades leading it. If you go back and you look at large cap growth over the last 10 years, medium cap, small cap growth, the returns compared to their counterparts in value are like 3 times. Large cap growth compared to large cap value last 10 years, it's like 320% return compared to 90. It's like in the mid cap, it's the same spread. Growth, specifically large and medium cap, have been outperforming value for over a decade. So when people come to me and say, oh, this market's only being led by growth, be careful. Dude, it's been led by growth for over 10 years. Nothing has changed. Nothing is new about this. And their stocks participating. So it just goes back to show, like, I can't wait to hopefully get that little pullback in wave 4 to buy more. I'm still very bullish on growth.
Okay, just an interesting point. We have very informative chat here from EKS Squared. He said, if you take the top 50 of the S&P cash, if you take it out, the price earnings is only 15 times.
Yeah, no, I've heard and read something similar. I think that's really good. And then I go back to him. I love that observation. What does that tell you? I mean, do you feel, I think if you include the top 50, you're probably trading 18 and a half times forward earnings. Like, do you have a problem? I mean, do you have a problem with being long at 18 and a half times? I'd ask you.
You know what? That was one thing that I wish I would have been a little bit more forceful with that, with Dennis because him and Mitch were bearish for an extended period of time. And I tried to argue, not successfully, that, maybe, with inflation, with higher interest rates,
Right.
with the environment, maybe, 18 is the new 15 or the new 14. I mean, why not?
Technology is deflationary. And I hate to take Kathy Wood's argument out, but I was saying that even before she got on the scene, companies are running better with better operating margins, better gross margins. Therefore, they warrant a better multiple. Can I show you it? And I promise I'll let you go. I know you're trying to wrap up. Look at forward EPS estimates. I can show you a quick chart.
Okay.
It's just taking me 1 second to go to wide charts, EPS forward versus SPX. Okay, here we go. Where's Zoom? Zoom. Share screen. I'm sorry to hijack your show, Joel.
No, Todd. I mean, it's different. It's different content than what we deliver, and that's what we like. We like variety. Variety is the spice of life.
Nice. All right. So this is 10-year of the S&P 500 EPS, current earnings per share, right? They're right around $40-$45 a share per quarter. So the big deal is where are they going to be at the end of the year? $240 a share for calendar year 23. But look at EPS forward estimate. Wide charts is a little slow filling this in, but look at where forward EPS is as we go up the scale. And I'm looking at this little guy here. So supposed to bottom out in Q4 at 22, which we just came out of. Nice move up in Q1 at 23, but look at where they're putting EPS going into the rest of 23 and 24. I mean, earnings are going to continue to go. Operating earnings are doing the exact same thing. If you look at operating earnings forward estimate, I mean, the companies are on an operating basis are becoming more lean, making more money. And yeah, if it's led by fewer who are, spending a lot on technology and being efficient, they're going to displace workers, operate more efficiently. I think it warrants slightly higher multiples. So if the S&P is 18 times forward earnings, I don't know, it's fine with me.
So. We're getting some observations here. Big ramp up, and if that's true, we're looking cheap here. So we're gonna wrap things up on this Wednesday. Another informative session with Todd Gordon, tradinganalysis.com and New Age Wealth. And Todd, always an education for me here. Have fun at the pool party. And just say congratulations to Brody, right? That's your son, Brody?
Yeah, good memory. No, it's both the twins, Jake and Brody. Both of them playing the same team.
Okay, that's great. All right, we'll talk to you again next week. Thanks, Todd.
Hey, thanks for having me, Joel.